All right. Hey, everybody. Dan Fitzpatrick here yet again. And I want to talk about SanDisk actually. And we're at Stock Market Mentor. If you're a subscriber, you know this, obviously. We're in all four of the big storage trades. SanDisk is definitely my favorite, also my biggest position. Micron works pretty good too. Western Digital, also a winner, and Seagate also a winner. Seagate, not, I mean, we're up really nicely on this, but not as much as the others. So what I want to talk about here is SanDisk and kind of how to get into this. Hopefully, I mean, you can't pile in now, but I had a live training session just a few minutes ago, and one of my members was asking about this, like, hey, how do I get in? And I forget whether she was I'll just talk to you for a minute. So I forget whether she said she was already in. I think she was already in and she wanted to add to the position. And so I thought this is a good opportunity. It just kind of gave me a sense of maybe I need to talk about this to you in this free video because it's really important. This is the way I see it. Every so often, it doesn't happen often. God, I wish it did. Every so often, you see this stock or maybe a group of stocks. We saw it in quantum computing a while back. We saw it with some of the semiconductors. We saw it with NVIDIA a while back. We saw it with Palantir. Every once in a while, you'll see this stock or this opportunity that just goes and really goes parabolic, and you're going like, crap, I didn't buy enough, or I didn't buy any, or I knew it was going up, but I didn't buy it, or yeah, I really, really liked it and I owned some, but I just kind of got nervous and I took profits at 11%, and now it's up 15% more than when I bought it. What do I do? Stuff like that. That's called being a sold out bull. And I got to tell you, it sucks. I've been there many times, but I'll never be there again. And I'm going to show you exactly how to do that. First of all, the main the primary way that you can avoid being there is to always be trading in fractions, whether it's 50% or you split your position up by thirds or quarters, something like that. But it doesn't even have to be formulaic that way. It can be, you know, I got 150 shares. I want to take some profits. Like, I don't know, man, maybe I'll sell 30 shares. Okay, well, that happens to be 20%, but it's not, it's 30 shares. Whatever. You just make a decision to lighten up a little bit. And oh, I want to sell into strength. All great traders will sell into strength. That's what they do. That's what you should do. That's what we should do. Everybody sells into strength that way, but it doesn't mean that you have to liquidate your entire position into strength, because when you do that, I mean, sooner or later, you got to close everything out. But when you do that, when you sell your whole position into strength, look, what you're really doing is saying, this is the top. This is why I'm selling it all. And so maybe you've made a good trade, but if the stock goes up another 15%, I mean, you have to acknowledge that you're wrong. You have to acknowledge that you mucked up the exit, because if somebody said, yeah, you can sell now, but you know you're going to miss out on another 15%, you would have said, okay, well, I'm not going to sell now. Thanks for the tip. And you would have hung on to it. So look, don't make any mistake and don't fricking pat yourself on the back. Oh, I sold into strength. The idea is to make as much money as you can on a trade that's working. If you put your money in a trade and it really starts smoking, you want to pack it on. You want to make as much flipping money as you can. Okay, why? Well, that's the nature of trading. That's what we want to do. But getting back to math, you're going to be losing on a bunch of trades too. They call it speculating. It's not winning. It's not money harvesting. Dollars don't grow on trees. I had a joke there, but I'm not going to tell it. The bottom line though is you're going to be wrong on trades. Every once in a while, you might even really screw the pooch and take a bigger loss than you should, and you're kicking yourself over it. Well, when you can make a lot of money on one particular trade, you want to take advantage of that because then it makes up for all those errors, all those mistakes, all those trades that maybe they were great trades, but they didn't make you money. And you can lose money on a good trade. If you traded it correctly, if you followed your process, sometimes the stock's going to give you the other exit. It's going to give you your loss, your stop loss. It's going to hit your stop loss. But if you've framed your trade correctly and you've taken an adequate assessment of what the two sides of risk are the risk of losing money versus the risk of missing out on making money. If you've got that thing dialed in, then, okay, well, shit, I took a loss on that one. That's okay. I'm live to fight another day. But you can live to fight another day with a lot more dough if you are really making a lot of money on those few trades that are working really, really well. So with that, I hope that makes sense to you. But with that, I'm going to go ahead and share my screen, and then we'll look at SanDisk. And in particular, the one thing I want to show you is I want to show you how you can add to a position responsibly and even take a new position, although, it's a little problematic to do that here. But there's a couple ways. So let's say you got in down here, somewhere in here, okay, on this breakout above this pivot. And this thing moved really, really fast. But so let's say you got in here, but you didn't get enough. And you're going, crap, I wish I had more. And you're waiting for the big pullback that doesn't come. Now, if the big pullback doesn't come, that means it's a really strong stock, stronger than you had thought that it would be, because otherwise you would have bought more. So, okay, that's the way the trading game works, but you want to buy more. So there's a couple different ways you can do it. First of all, you would look and say, I'm trying to think of how to frame this. Okay, so let's say you're looking to buy this during the day. I mean, ultimately it closes up at 506. And that doesn't surprise me. I talked about this live. This thing was bumping up against 500 for a while. And then what we're looking for is what happens right at the end of the day. Are there cleanup buy orders? Boom. Or did all the desk traders who are filling big orders, did they already get enough? And then the stock just crashes down or just pulls back because all the buyers have left the building. As it turns out, they hadn't left the building. Shoot, they're still trading now. But let's say during the day, you're saying, crap, this thing went up. It gapped up again today. I'm bummed out. It's at 475 now. Dang it. I knew I shouldn't have sold everything. So what am I going to do? As it turns out, you would have been right to do that here. But let's talk about making an intraday decision. So you're looking at the stock at 475 and it looks really, really overbought, but you really kind of you still want to really make a trade. You want to get into the stock. So what you do is, let's see. Okay, so it's at 475, like right here. We'll say it's 480, so I can show you what I'm talking about. So you want to buy the stock. This is the 15-minute chart. You've seen what the daily chart looks like. This is really kind of scary to be doing this. But what you can use is the intraday volume-weighted average price as your reference for the trend for the day, because when a stock is above the VWAP, volume-weighted average price, and they're both drifting higher, that tells you that pullbacks are being bought. Like whenever the stock gets back to the average price over the last day, there's buyers coming in saying, great, I'll take it. It's not overbought. I'm buying right at the average price. And then the stock continues to move. So if you are buying this intraday, you want to look at the VWAP and say, okay, I'm going to buy this stock. God, it's run a lot, but I'm going to buy it. I'm going to treat it as a new trade, and I'm going to use the volume weighted average price as a reference point. Shoot, while I've been talking here, yipping in this stupid video, it's up at 485. So what am I going to do? I'm still using the VWAP. Right here, it's at 471.26. So what I do is I buy the stock. Where is it? Like, I'll buy the stock when it's here. Crap, it's at 485, 486, 487. I'm going to use the volume weighted average price as my reference right here. So if I'm buying here and I'm going to sell down here, I am risking 3% on a massively overbought stock. Massively overbought, but I have a logical reason for buying when I'm buying and for putting my stop where I want to where I want to say, okay, if the stock, I know I'm really late on the daily chart, but the stock's still moving. If the stock falls below the VWAP, I'm going to get out. I'm going to get out gracefully, maybe with my tail between my legs a little bit and say, well, I tried to chase this stock. It seemed like it would work, but it didn't. So I'm out for a 3% loss. As it turns out, you're not out. By now, a few days or a few, 15-minute frames later, a couple hours, what do we got? We got a 4% gain, and you're in the stock. So that's one way that you can be getting into here. Another way, kind of a similar way, much simpler, is to just use the prior day's intraday range. Like this is kind of ridiculous because it's up 12% today, but let's say it wasn't. Even if it was. Tomorrow you look at this and you go, crap, now it's up at 510. I want to buy some. Okay, so you can do that. And then what's your drop dead? How do you know whether this thing went parabolic and now it's reversing, as they all do eventually? You say, well, if we get a complete reversal, if the stock, let's say it gaps up in the morning, and it may very well do that, but then it pulls all the way back down to here. Okay, that's the time that Elvis needs to leave the building. That's the time where I need to say, you know what? That is not my kind of pattern, and you're out of there. So this is one way that you framed a trade. Now you're risking like 13% to do that. That's why I like the VWAP method better. But it's one way, two ways actually, that you can get into a stock that's massively overbought. Now, there's a lot of good traders. Frankly, most of them would look at me and say, Dan, what the heck are you doing? That's a stupid way to trade. And they would be right. But what else are you going to do if you missed a good move and you really think the stock's going higher and you want to get involved? I don't know. I mean, the other way to do it is say, okay, well, I missed that, damn it. So be it. And you could do that. And most of the time that's a good practice. You say, nope, I'm waiting for my entry. And then I'm going to go ahead. And buy. But I'm waiting for the best entry, which, by the way, would have been back here. But the other thing is, like, sometimes you just get the can't help it's and you go, I just want a small position, just a small position. I've just shown you how to do that. By the way, we're going to be trading SanDisk live on January 30th. So if you're interested in doing that with me, you can let Karen know. I think we're sending out emails letting people know how they can get in on that. Or you could just email Karen at stockmarketmentor.com and she'll give you the appropriate information. Okay, so that's all I got for you. I'll see you next time.